The local market closing flat today, more or less. There are some concerns that the soaring energy prices, including the oil price, will put a dampener on economic growth globally. Gary Booysen from Rand Swiss has been watching the markets today. He joins us now for some insight. Gary, good afternoon. Flat day today. I mean, you see that oil price rising and there are now inflation concerns. Is that the reason why we've had such a muted day, both locally and globally?
I think so. We saw some of those inflation concerns creeping into the US markets last night, finishing down around 0.7%. That fed into Asia this morning. We had a couple of comments out of China as well around a further regulatory crackdown, specifically on the financial sector corruption. That also took a little bit of the wind out of the market sell. So as you said, a little bit of a mixed day. We had the resource index down slightly. We had the industrials down around 0.6%, but we had the financial index helping to lift things up around 0.76%. So overall, not too much going on, but a lot of movement underneath. So while we had the likes of Nedbank up almost 3%, some of the precious metals players like Implats up over 3%. Goldfields also doing well, chalking up to 2.81% rise. We had the likes of Exxaro and Sasol actually leading the downside. So Sasol down over 5% at one point.
Yeah, it's interesting because the oil price was pretty much still strong on the day. The IMF, the International Monetary Fund, says our growth will be higher than expected this year, around about 5% from its previous forecast at 4%. Gary, how valuable is this type of reading from the IMF? Because remember, just quickly, it also says that slower vaccination rates in developing countries are also something to actually be flagged.
Yeah, so this is part of it's a twice-year report, the World Economic Outlook from the IMF. And I think what was so encouraging about the report was that we really bucked the trend. So South Africa got a growth upgrade, looking at 2021 to be around 5%. Now that, as you mentioned in the top of the show, off a very, very low base, we expect that to moderate, or they expect that to moderate at least to 2.2% in 2022. And if you look at their long-run forecast, so you look out to around 2026, it's only kind of a fairly lackluster growth rate of about 1.3%. So it was encouraging to see that we might get a little bit extra growth. But as you said, the warning's just very, very clear in the report today. So one, a very uneven recovery. So vaccinated economies going to do slightly better than less vaccinated economies. We're also seeing just comments around the supply disruptions that we've seen, the rising commodity prices, definitely sounding a warning bell to central bankers about rising inflation, and also pointing to the potential impact of climate change as well. So the world actually getting a downgrade and a stern warning, but South Africa getting a little bit of good news.
And just finally, Gary, a couple of months ago, if not a couple of weeks ago, we saw that volatility in the rand from a weak rand against the dollar suddenly shooting right up until, I think, 14.10 or so against the US dollar. But now it's kind of been hovering around that 15 rand mark for quite some time. With those changes on the market, what do you see for this local currency?
No, it's always difficult to predict where the local currency is going to go, but we are very, very linked to commodity prices. It's just if you overlay a commodity index over the local currency, you can see the correlation is very, very high. So if we see this persistent inflation developed in developed economies, if we see commodity prices remaining elevated, we could see the currency just pulling back and strengthening back towards that 14 very, very easily. Of course, a big concern for everyone though is just the energy shortages that we're seeing across Asia, Europe, OPEC plus obviously keeping the taps very, very tight, and demand starting to rebound. So if that hampers growth, if that hampers more of the base metal prices, then the currency could quite easily struggle, because a higher inflation is certainly not going to be good for risk appetite, and certainly that means not good for emerging economies like South Africa.
Indeed. Gary Booysen from Rand Swiss, thanks very much indeed for those insights. All right.